Hello, my name is Michael and I'm a full-time trader with True Traders. Today I will show you one of my profitable strategies which I use on several pairs, but in this case we'll use it on gold, and I will show you three setups from Friday, and I'll only do Friday also to show you that there are several setups every single day. And today is Saturday, so it's from yesterday's charts. In each setup, I will show you three different versions: a more aggressive version, a normal version, and a more safer version of the trading. So you can decide for yourself what fits your personality. In the end of the video, I will show you some statistic that most likely will convince you that this here is a very good strategy, and you don't need to do much to get a good monthly return or good monthly profit. So let's start with diving into the chart. So this here is yesterday evening where the chart stops. I'm on the futures market, and let's start with the first strategy, which is the more aggressive on number one. So I will remove this one. This here is my aggressive version of the RSI divergence trading gold. As you can see, I will make an arrow to make it a little bit more visible. As you can see, price is going down. First, we have a rejection down here. First rejection. What I normally do is I put an alert here because I don't like to sit and watch the charts the whole day. I have better things to do, to be honest. So when the alert goes off, I open my chart, my laptop, and often I have something between 20 minutes, 60 minutes before the setups actually play out. So I have plenty of time. What you can see here is the first rejection. Here on this candle, my alert will go off, and I'm just waiting. So here you can see here's the next rejection. And as you can see down here, it starts to make bullish divergence. Bullish divergence is when the price make lower low, as the price goes down from previous week, but the RSI makes higher high. That means it goes higher than the previous low. So the aggressive version, I have here a box, an area where from the previous low, and when the candle closes above that area, I will simply just enter. As you can see here, this here is around 2.2 INR trade. Let's just call it 2 INR. And because I'm not greedy, I want to have my profit. I want to be more sure of a profit. I don't want to go for 5, 10, 20 INRs because these profit targets are completely unrealistic. Of course, sometimes you can have them, but better to have some secure, safe profit every day. And my target is this resistance level up here where I have a box. Again, the price is making lower prices in a downtrend. So I don't want to have my target up here because there's no way to say that it will break all this resistance area. But I have a good confidence that it will at least go up here. As you can see, price went up here and continued up, but I don't care about that. I have my profit, closed the trade, closed my laptop, and went on with my life. That was this aggressive setup. So let's try the normal setup and see how that looks like. Again, I have my alert and I see it starts to make bullish divergence. But here I am making a box that covers all this area here. This here is a volume area, it's a range area. There are many names for it. But I'm waiting until the price is breaking this area here. And I'm also waiting for the price to go up and make a little retest. As soon as it make the retest, I enter at the first candle close. And again, I have my target up here. I'm not being greedy. I have a safe target. This here is 4 INR. You can easily be even less greedy and just take the target here, which is still above 2 INR, which is a very good profit. So you can see here I gave the price more time to develop and took a more safe trade at the retest. So let's take the last example for this setup, which is the more safe approach. That is here. So again, same scenario. We have the divergence here. Price goes down while the RSI goes up. And again, I have this area here, which is for me a small resistance area. I wait again for the price to break it, go up, and again it makes a retest. But this time I put an extra, you can call it safety in it. I will have this trend line here. So I will not enter here at the first candle open. I will simply wait until the price also breaks the trend line. And then at the first candle after break of trend line, I will enter my long and I will put my stop loss above below this wick here, because if the price comes down into the trend line again or below the trend line, then my idea is invalidated. And again, I have my target up here. I don't want to be greedy. And this here is also a 2 trade. So again, this is a safe approach. It takes a bit longer time than, for example, if I show the more aggressive approach. So again, you need to find the version that fits your personality, that fits your time, because maybe you don't have time to wait for the price to make the retest, but you need to enter your trade a bit faster. So then this approach here might be better. So let's move on to the next example. In the start, I said I will show 3 examples, but the second example is also a divergence, but where I show you why not to take the trade. So let's move on to that. That is here, and remember we are still in Friday. So this here is all in just in one day. So here we have the next setup. Here I would have an alert here. So when the price breaks the alert, I will wait for the divergence. As then you can see, we have divergence here. From this point to this point. So let's say open this one. There is a simple reason why I wouldn't take this setup. As you can see here, when price made the divergence, I have here a box which is a support area, and price never really came down and broke this area here. If you notice on the other trades, here's the arrow. I waited until price makes some kind of break of these areas here. Because you cannot just trade all divergence. That would lead you to be rigged and into ruins and lose all your money, and we don't want that. So again, price broke it, but instead it made a very good retest. And if you are trading several strategies, this year would be an excellent pullback to enter long and continue the trend from down here. But that is not what I'm showing now. I will do that in another video. So here, see, the alert went off, waited for the bearish divergence here. And bearish divergence means that I expect the price to go down, but the price never really got down, never really tested. It only tested this area, never broke it. So let's move on to the last example. I'll remove this one here. Last example is here with the aggressive setup. That is here. And remember, we are still in Friday. So this is only from 1 day's trading. So here, again, I have my alert down here. My alert went off here. So now I open my laptop. I'm interested in this area and what happens. And I wait for the price to make my divergence. Here, it also made a double bottom. And you can see here the RSI is going higher. So the aggressive setup will be again, I have this box here is the area I want to be broken. So at the first candle open, it breaks this area and goes up. And in hindsight, it would have been very nice just to do like this and get a 20 RNR trade. But that is not how I trade. It's not my approach. I want to have my I prefer to have my profit every day. I do it's not how it works, but I prefer to have a profit every day in a consistently way where I don't aim for the moon. So again, let's go back to the setup. This here is my resistance area. You can also see my resistance area is where the last high here stopped. So when I enter, here, the candle closed that breaks this small box. I am just aiming for a 2 hour trade, which goes up here, and then I close my trade, I close my laptop, and I move on with my life. This is the aggressive version, and which I prefer to use if I have a lot of stuff to do in the day. I don't have so much time to sit and watch the charts. So let's try the more normal approach on this setup, which is here. Again, I have my alert that goes off here. I wait for the pullback, goes down, RSI is going higher, double bottom, very good signals. But here I added a trend line as an extra confirmation. So when the price started to go up, I waited for it to break the trend line, and then I entered at the first candle open. And here my target is a bit different because when you break a trend line like this, there is a good expectancy that it will go up and test the top area. Maybe not the exact top, but the area where we have resistance. This box here represents the resistance area. So I have my take profit up here, and you can see here this is a free RR trade. And the risk management here is different because when you have an R&R that is more than 1.5, then my approach is that I look at the price action and I could maybe take some profit off here when it starts to reverse. Or you can wait until it gets up to your target profit. That is a subjective personal approach, which I think you should do as you want to do, which fits your risk profile. But again, you can see here the price continued up, but I'm more than happy with my profit here. And after it takes my target, I don't care about it anymore. And also, if you don't have much time in your life to monitor a trade, then after it broke here, you can set it as a set and forget trade, and you can say, okay, when it comes up around here where there is another resistance area, you can move your stop loss to break even or do what fits you the best. So this here is the more safer but still normal setup. Let's try the last setup, which is the complete safe setup. Here. Here's a little bit more explanation. Again, we have here the double bottom and the RSI is making a bullish divergence. Still again, we put the trend line here. We wait for the break of trend line, but this time we have more patience and more time. We wait for the retest of the trend line. And how do we determine that retest is valid? Because we use market structure. This here is a higher high from this point. So we know that the price, there's a good chance that is starting to get in an uptrend and changing from this downtrend. So we wait for a break of trend line, and we want it to break this high here, and it does, and make a higher high, goes down, but we don't enter long at the retest exactly. We want a little bit more confirmation, and we have that in this little trend line here. When price break this trend line here, starts to go up, we enter here at the first candle open. And again, we use the same area up here as a target for our trade. The stop loss in this trade this year is around 4 R&R, but my stop loss is below these wicks here. If you have more conservative approach, you can put your stop loss down here below these, and you'll still have around a 2 R&R trade. So these were my free setups for Friday, and you get between 1 to 4 setups each single day with this approach, and that is only on gold. If you add more assets, then you can have more setups and be a bit more picky with your setups. In the end of the video, I promise to show you some statistic how this setup here, how this setup and approach of trading is very valuable. So let's do a very conservative estimate. Let's say you don't have so much time, you have a lot of work, you have family, you have kids, and then you need to take care of that. In trading, if you put trading above your life, then most people will fail. It has to be you do your trading after your life. You do your trading and and make your life the most important. You don't fit your life after trading. You fit your trading after your life. So let's say that you don't have much time, and you can maybe only take, let's say, 10 trades a month on this approach here. 10 trades. That is the only time you have, and that is completely fine because in this trade you have minimum 2 R&R. So again, let's be conservative. You have 10 trades with 2 R&R in average, and you have a win rate of 50%, which is also very conservative. That means every second trade you win, every second trade you lose. So 5 winners give you 10 points, or 10% if you use 1% as risk. 5 losers gives 5% in loss. Total you have 5% in profit per month with 10 trades. And you can see if you have time to do, let's say, 2 trades a day, and again we have a conservative win rate at 50%, one win, one loss every day in average, then you have 5% a week, and then you can start to see how much it adds up. So again, try this approach, test it, do it on a demo account, do it on a evaluation account, but learn to be familiar with it before you put in real money. I thank you all for listening and watching, and I'll see you again next time.
Tell them how you're feeling, Ems.